Historically, acquiring a second passport meant uprooting your life and waiting decades to naturalize. But today, if you have the capital, faster pathways open up. The problem is, the menu of options to buy citizenship usually forces you into risky territory. Managing a business halfway across the world, or trying to predict real estate fluctuations in a foreign market isn't for everyone. This brings us to Turkey's Law number 5901. It outlines several legal avenues for foreign investors to acquire Turkish citizenship. This visual menu breaks down the major investment paths. You have real estate and fixed capital, but one route sits in the sweet spot. You can bypass physical assets and put $500,000 directly into government debt, using instruments known as Eurobonds. Choosing this specific debt instrument takes a process that is usually a bureaucratic headache and turns it into a strict, highly predictable 40-month financial countdown. Month 0 starts before a single dollar moves. Having $500,000 is only the baseline. You first have to clear rigorous anti-money laundering checks aligned with the International Financial Action Task Force. Turkish authorities will require exhaustive documentation, bank statements, business records, and tax filings to prove the legal origin of every cent before it can even touch their banking system. This flowchart tracks exactly how the money moves. Once the capital passes compliance, it is transferred directly into a newly opened domestic Turkish bank account. Next, you authorize a licensed Turkish broker to take that cash and purchase the government-backed Eurobonds on your behalf. Those purchased bonds don't sit in a standard checking account. They are immediately routed into Turkey's highly regulated central registry account, known as the MKK. Then comes the most critical mechanic of the entire process. A legal hold is applied to the account. This strictly forbids you from selling or transferring the asset for exactly 3 years. If you break this hold or attempt an early withdrawal, your citizenship application is immediately canceled. Extreme financial discipline is the true cost of entry. For the next 3 years, your initial capital is completely locked down, but the global economy continues to move around it. This split-screen chart illustrates why investors favor US dollar Eurobonds over level bank deposits. By holding a bond priced in dollars, the core $500,000 requirement is insulated from local Turkish lira depreciation. There is also a major mechanical advantage here. While the principal amount remains locked, you are legally allowed to collect the bond's periodic interest payouts, known as coupons. You earn a regular yield without violating the strict 3-year block. You also have to consider the risk of sudden legislative changes. In late 2023, Turkey raised the minimum real estate investment for this program from $250,000 to $400,000, which caught many prospective buyers off guard. But a Eurobond is a fixed state debt instrument. Securing this specific asset shields your application from those midstream policy shifts because your terms are locked in directly with the government. During these 3 years, you trade your short-term liquidity for a politically insulated, yield-generating waiting room. When the 3-year timer finally hits 0, the financial block is lifted, but the Turkish passport doesn't arrive automatically. You now enter a short bureaucratic sprint. The immediate requirement is to prove you respected the rules. You apply to the Ministry of Treasury and Finance for a certificate of conformity, which verifies the asset remained untouched for the full duration. With that certificate in hand, you compile your application forms, health checks, and criminal records, and submit the entire package to the Ministry of Interior. At this stage, your financial risk is over. The investment phase is complete, and the process transitions into an administrative checklist, culminating in a presidential signature. Around month 40, the process concludes. You receive your Turkish passport and national ID card. Because the holding period is over, those original Eurobonds can now be freely sold, allowing you to fully withdraw your initial $500,000. The macroeconomic math behind the program is clear. The Turkish state secures a massive injection of foreign capital to fund operations for 3 full years. This is a stark departure from how we historically view nationality, tied almost entirely to bloodlines or birthplaces. Today, citizenship operates as a highly regulated, mutually beneficial financial contract between a sovereign state looking for capital and a global citizen looking for access.